Hey, everybody. So, good news and bad news for investors. The good news is the market is at an all time high, or at least very close to it, depending on when exactly you're watching this video. The bad news is it's getting a little bit tougher to find some bargains in the market, especially if you're a growth stock investor. It's getting a little tougher to find things that you're willing to pay the money for. Um, but we got you covered. Tyler is here with me. We are going to talk about two stocks that look like great investments to buy and hold forever right now. And we're going to get right into it in just a second. Before we do, please take a minute and check out the link you see on your screen for a message from our sponsor, The Motley Fool. You get the top 10 stocks to buy right now, and it's a great way to support this work we're doing. So, we're going to dive right into it. I'm going to kick it over to Tyler first because he's got a really interesting one, and I got one that I know Tyler is pretty familiar with. Tyler, what are you thinking is a good buy right now?
Yeah, so this is a little off script for me in terms of valuation because it's not, I wouldn't say the cheapest company out there right now, but a reasonable valuation for an incredibly good company. And that's A.O. Smith Corporation, um, industrial manufacturer that many people may have not heard of. But A.O. Smith is the largest manufacturer of water heaters and commercial boilers in North America. Again, not the most exciting business, I know, but hey, that's what you get when you bring me on videos. What One of the things that makes A.O. Smith, in my opinion, so resilient and such a great business to own over the long term is the fact that demand for these products is incredibly consistent, much more so than I think a lot of people would think. Typically, when you hear water heaters, commercial boilers, things like that, you probably think it's like very cyclical and tied to like commercial construction or residential construction. But actually, more than 80%, and it's closer to like 85% of all of its sales are actually replacement of existing systems. So, like when the water heater in your house breaks, that's more than like 85% of its sales in North America, giving the company an extremely resilient like sales base to work off from because you know there's a lot of things that you'll go maybe a week or two without. You probably don't go a week or two without hot water. That's one of those things where like in the middle of the night the hot water goes out. You're calling a plumber and that thing's getting installed the next day. And so with that in mind, it makes the business through this like economic ups and downs of the economy or whatever, or it says it's building products or consumer discretionary, but let's face it, like this is going to happen. It's a sale that's going to have, go on regardless of what happens. And A.O. Smith's the largest like I said, biggest. It has about 40% of the North American market, both in residential and commercial applications, and it has been expanding globally. I'm kind of two minds. It's nice to see the extra growth that it's getting from deploying its assets in China as well as in India. And we're seeing some pretty impressive growth. It's 15, 20%. Certainly nothing you're ever going to see in the North American market. But it is much more cyclical and kind of economically sensitive because they don't have the installed user base for its systems like they do here in the United States or North America in general. And so sales tend to be a little bit lumpier, margins are a little bit lower because of pricing, and just things like that. It makes it, promising, but at the same time, you could kind of see it going sideways is at the same time. All of that said, what impresses me about this business, like I said, not only is it very resilient in terms of the market and its position, but also on a net, it has less debt on its books than it has cash. So it's kind of it has a net cash position. And management has done a splendid job of paying a dividend. It's not the biggest one in the world, 1.6% dividend yield as we record today, but it's grown it at more than 10% annually over the past 10 years on top of share buybacks throughout the entire period that have, actually reduced share count and not just gone to line management's pocket with stock options. So good shareholder yield in that. And as of today, it currently trades for about 21 times earnings. That, in my opinion, can be a little expensive for a relatively steady grower. But like I said, this isn't something that you're going to have to worry about in the economic cycle. It's very consistent, and as long as management doesn't do anything to screw it up, I feel like this is one that you can own for a very long time at a reasonable valuation today.
So the one I'm going to talk about, it's also kind of a construction residential, that kind of play, but it's one that is has a little more execution risk than A.O. Smith. It's Howard Hughes Corporation. Tyler's probably pretty familiar with that company. I think I had a talk with you when they announced they were buying the all the land in Phoenix to develop a new community. And
Way
so,
outside
just if you're
Phoenix.
not familiar, Howard Hughes describes itself right way outside Phoenix. Howard Hughes describes itself as a real life version of the video game SimCity. So the general idea, and obviously there's more to the business than this, but the general idea is Howard Hughes buys a big plot of land, like the one in Phoenix is about a little over 30,000 acres, I believe. It starts to sell a piece of that land off to residential developers who build houses. The homes there create demand for commercial assets, say like a convenience store or a office building or something like that. The presence of those commercial assets makes the remaining land more desirable, so it'll sell a little bit more off to home builders. And this cycle can repeat for 50 years before it's fully built out and fully really the value is realized. So an ultra long-term investment. These are called master plan communities. If you're familiar with the Woodlands in the Houston area, if you're familiar with Summerlin in the Las Vegas area, they have a kind of condo community in Hawaii called Ward Village that's just a top-notch development. These are huge. They're more like small cities than they are just neighborhoods that you would normally think of. The term master plan community gets kind of thrown around for smaller ones, but Howard Hughes are grand scale master plan communities. Um, the recent environment hasn't been fantastic for the company. Um, Obviously, if there's not demand for real estate, it's not a good business to be in where you're relying on this cycle of value creation, demand for land, demand for commercial assets, ability to finance all of the above, things like that. Um, but the recent results show that things are turning around. Home sales in its master plan communities have more than doubled over the past year. Tyler and I have discussed in other videos, it's a really good time to be a home builder. So the builders who are buying land from Howard Hughes are doing well. Land sales are up 43%, but a lot of that's at the upper end of the market. There was one neighborhood in Summerlin that they drove me through a year or so ago when I went to their investor day, and it's like it's where Celine Dion lives, and those ultra high end land sales are really what's fueling the growth. So there's a lot of potential at the lower end of the market. In 2024 and beyond, there are a few catalysts that I think could really drive shareholder value. So number one, first and foremost, the real estate market is expected to thaw. Mortgage rates have already started to decline. It could be a big catalyst for their land sales. Lower interest rates will also make credit markets start to thaw, so capital will get less expensive. Just like pretty much any commercial developer, Howard Hughes relies on borrowed money to build its new properties. So that could become a lot easier. It only has $17 million of maturities in 2024, which is very low compared to a lot of its peers. And I'd love to get Tyler's take on this last piece of it. They have a plan to spin off their non-real estate assets this year, which they have quite a bit of. They're calling the new company Seaport Entertainment. This includes the New York City Seaport, which is where it gets its name, which is a premier entertainment venue. I've been there. It's fantastic. Their stake in Jean-Georges restaurants. Actually didn't even know this till I dug into the numbers this quarter. They own the air rights over the giant fashion show mall in Las Vegas, where they're eventually planning to build a Vegas Strip casino. It's a big property right on the Strip. They don't own the mall, but they own the air rights over it. So they'll have a hand in the casino. And they own the Las Vegas Aviators AAA baseball team. All of that they're planning to spin off so they can be a pure play real estate company. My thought is they're planning to eventually become a REIT because of this. And this is kind of the catalyst to make that possible. But do you think that can unlock some value by making them more of a pure play real estate company and letting them kind of focus on entertainment on the other side?
Yeah, I would say it's a hard business to value because there's a lot of moving parts, and like you said, there's a lot of like oddball kind of assets just sitting on the books there that really just kind of hide behind a lot of, I would call, dormant capital. when you own 33,000 acres of land that you plan to develop over the next 50 years, it's kind of hard to like extract exactly what the book value of that is at any given moment. And so being able to kind of spin some stuff off, maybe generate some cash to accelerate development for some of these things, because you know, one thing that, if I may give Howard Hughes fault, is that it moves incredibly slow with a lot of these projects. So much so that you kind of like, well, how are you growing book value here? And so perhaps spinning some stuff off and making a little bit more, single focused on a certain thing might be a good idea.
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.